Hi, Tim Bigham for Delta Derivatives, Option Hedges and Edges, powered by the best option scanning tools on the market today, rbtrader.com, and taking a look at a market that really doesn't want to ever die, apparently. We have the VIX back below 12 again, even with weakness recently in Apple, ExxonMobil, two of the biggest names out there. So we're seeing, the VIX overall market kind of going nowhere, but seeing, wild moves on the stocks. I think setting up for a nice dispersion trade. So I'm actually buying some SPY puts to effectively buy the VIX and then selling out of the money put spreads on Apple, Exxon, some of the bigger names. Take advantage of the fact that overall volatility is very low, but individual volatility comparatively high, looking for that spread to come in here, looking to capture that dispersion. Also looking at Apple itself, which opened lower again this morning on a downgrade, turned and headed higher. I used some of the weakness this morning, sell all the money put spreads to 110, 107 next week, collecting about 60 cents premium. Just looking to be a buyer on Apple on further weakness. I think, given the fact that Apple is down about 12% from its highs, everyone pervasively bearish now, gives me, from a contrarian bent, some bullish specter. Also ExxonMobil as well. Looking at yield on that, approaching about 4%, the biggest comparative differential in yields to the 10-year Treasury since the financial crisis. 10-year Treasury is right above 2, Exxon almost at 4, slap a covered call on top of that. I like that trade as well. Exxon's maintained or grown their dividend for 30 straight years, so I don't think the dividend's in any danger here, even with oil at these low prices. And also seeing some big buying on another oil-related name, WMB. October 57.5 calls, saw almost 51,000 trade on Monday, saw about another 8,800 trade yesterday versus about 0 open interest to begin the ride. We're looking at almost 60,000 open interest here. So there's always takeover chatter on this name. The IV jumped off the sheets here, went from, about 40 to well over 48. So I'm positioning along with that big call buyer. I'm actually buying January 57.5 calls, which traded about a 38 implied volatility. Those bumped up just a little. Selling those October 57.5s, paying about 53 cents on that spread, worth about 68 when the vols realign here. I have a defined risk trade that is positioned bullishly if we do get that kind of big move to the upside that these call buyers implied. So until next time, in this market environment, it sure looks like it. Market wants to break out to all-time highs, but until it does, it doesn't. So as always, keep those position sizes proper and those stops going. Take care.